Hello everyone! Can you trade on a bear chart? Of course yes. Do I love doing it? Definitely not. But once again, I am following your lead. You asked in the comments for me to trade without indicators. So today I'll be struggling and earning money. Find out how it went in this video. Watch till the end. I hope it will be interesting. But remember, you asked for this. Let's start, shall we? The exchange currency pair dollar-yuan. I'll open a trade for a decrease. Today we'll be doing a lot of drawings since there are no indicators, old school trading so to speak. Focus on the chart. A more than obvious resistance level is visible on the chart for about 10 minutes. The price doesn't cross this barrier. I opened the trade right at the highest point of this level. It's clear to the naked eye that there is no volatility, although there is nothing to arm ourselves with today since I'm not using indicators. So I'm waiting for a price decrease as there is no strength to break the level. The decrease will be small since there is no activity from either side. I think the chart will just keep drawing a multicolored fence, alternating pickets of red and green. Let's observe. The trade will close very soon, just a couple of seconds. Here is the result. Phew, I was hair's breadth from failure on my very first try. An expected jump up. I think I'll move on to more predictable currency pairs. The exchange currency pair British pound US dollar. I assume that the price will decrease, so we'll open a corresponding trade and do some drawing. Here there's also a resistance level passing through many points previously crossed by the price. The previous candle grew very actively up to this level, after which the jump stopped, so I'm expecting at least a correction and a rebound from this level, then perhaps a breakthrough on the second try. Friends, if you plan to trade without indicators, it's better to look at the chart on a large scale. It's important to see what happened with the price earlier. Indicators process historical data on the chart, but when there is not there, you have to do this job. So I strongly advise against zooming in too much. Not seeing the price history, you might miss important details. Great forecast! The trade closes and brings me $455. Let's continue observing this chart. Friends, if you're just starting to learn the basics of trading, I invite you to join my Telegram channel. I've left the link in the video description. We have a great community there, where we chat and discuss strategies and trading signals. Feel free to message me privately with your questions. I always try to respond when I can. And you'll also have a great opportunity to earn. I run weekly trading marathons in a private club. It's all very simple. From Monday to Friday, I post trading signals and we boost deposits from $150 to $10,000. You can also find the results and reviews from my partners in the Telegram channel. Join us and start earning together with me. Continue trading with the same currency pair. Let's open another option for decreasing the quote price. Focus on the chart. I'll draw the resistance level again, which I traded from last time. As you can see, the price stubbornly refuses to shoot up above it. Notice how strong pattern, a double top, which signals a market reversal downward, has already formed on the rebound from this level. And the same thing is shaping up at the moment, similar double peaks, so I am expecting a decrease which should be no less significant. Let's see. I must say, it's harder to determine entry points without indicators as they provide additional market information, analyzing not just resistance levels but also candle highs and lows and other market data, which is hard to catch with the naked eye. Nevertheless, there is another correct forecast, and I'm down with this pair for now. Euro Canadian dollar. I'll open a trade for a decrease in this exchange currency pair. Essentially, we have a repeat of a situation where I earned earlier. Let's break it down again. I think you've guessed that the chart reached a resistance level. Again, the price reached it on a long green candle, but it's unlikely to break through on the first try. So classically, correction downwards and then a breakthrough on the next try if possible, but I'll be earning on the rebound. Again, if we develop this logic, a second peak forms after the correction, as we've discussed, a signal for market reversal. Of course, this is just a hypothesis. It will be important to wait for further texture developments on our chart. But so far, my forecast is coming true. The trade closes and adds another $430 to my balance. We'll stay here. Let's see if the second prediction comes true. Trading without indicators requires more time for observation. Naturally, you can never make mathematical calculations as quickly as a computer for mathematical analysis, especially on a minute time frame. Although technically it's possible, the formulas for many indicators can be found online and you can manually draw the same MACD lines. In fact, the first indicators were developed somewhat like this on paper. Even candles were drawn on paper based on the results of daily trading. It's hard to imagine now, but there were no computers back then. However, exchanges and markets have existed since ancient times. I'm going to open a trade for an increase this time. Let me explain my logic. There is a level on the way down, this time a support level. We see that the price was fixed several times at this level. There was a consolidation phase, so by analogy I expected a short-term rebound from it. Overall, it seems we are forming another pattern. Let's draw two lines through the highs and lows of the peaks. The figure is called a flag, an ascending trend. Its breakout could be a rise after several touches of the flag's boundaries. Then it's logical to assume that after the current correction the price will go to the flag's lower boundary. Or the price will go down, as we already have two peaks, which are a reversal figure. But for now the correction ends and I earned $415. To make further forecasts, we need to see how the chart behaves in the future and what figures it eventually draws. If you want to test yourself, pause the video and write down your forecast for the price movement and compare. Generate a simple moving average. We have already given many answers about the possible direction of the trend. On the other hand, such an exercise as trading without indicators allows you to immerse yourself more in the market. Conducting such analysis, you start to feel it better. I advise you to try it even on a demo account. After all, indicators discourage thinking and conducting such analysis. I mentioned in one of the previous videos that ideally they should not be the driver for decision making. You make the decision and you look for confirmation of your hypothesis in the indicators. Review it. Here's a vivid example of how this works. I'm opening an option for a price decrease. Considering all the above, let's pay attention to the two previous candles. One of them with a long wick at the top tell us that when trying to go up, sellers immediately suppress the price. The next candle with long wicks and thin body, a orange star. It's a pattern for the price decrease. Therefore, I expect a further decrease in the quote price and assume that the level will now be breached. Let's observe. The fluctuation of the candle's body indicates increased volatility. This is a sign of a price struggle between buyers and sellers. The end of the struggle is marked by the chart moving in one direction or another. The downward movement is slow now as the chart is passing a support level which is currently hindering it. I made a profit of $440. Let's continue working with this pair. Let's see how these dramatic events unfold. I don't quite understand. The price hangs at one level for so long that it feels like the terminal has frozen or the network signal is lost. But it seems everything is working. Friends, I have a request for you. Write in the comments whether you use candlestick and technical analysis in trading. What patterns do you use? I'm interested to read. I want to understand whether indicators have taken over market analysis or if trading based on charts is still being used. Back to trading. The market has activated and volatility is increasing. The candle's body is starting to sway. I think the moment to open a trade is close. I predict a further decrease, so I'll open an option in that direction. Let's get back to the drawings. And I want to draw your attention to an interesting point. Let's add some geometry. If we draw one line here and another along the support level, we get a triangle pattern. If we assume that this movement was speculative manipulation for stop hunting, it implies a rapid rise and equally swift absorption. Such a figure is always breached downwards and becomes a logical spike in volatility as it approaches the corner of this triangle. I made a great forecast and timely in entering the trade. One should not rush to conclusions before the expiry closes, but in this case I think a positive result is predetermined. Apparently the forecast of a market reversal after double top was correct. The trade closes. Another $460 fell into the deposit. With this I conclude the trading session. Let's discuss its results. How do you like this format, friends? As you can see, trading on a bear chart can yield results. I'm not suggesting you give up on indicators, but I want to convey that they're not a panacea, but rather easier work. Whether to use candlestick and chart analysis in trading is up to you, but it certainly expands both your arsenal of knowledge and understanding of the market. If you like the video, support it with a like. If you haven't subscribed to the channel yet, don't forget to press that button. The bell will remind you when my new reviews are out. Write in the comments what are the videos you'd like to see on this channel. I take my leave. Until we meet again, and goodbye.